So in the last video, we went over bullish market structure and how you could potentially look to enter at each higher low point to actually make a profit off of the next move. We also went over the start and ending of a bullish trend. Now we're going to be going over how to actually break it down to a lower time frame, right? So if you're trading based off of H4, right, then the lower time frames you're going to typically stick to are going to be H1 or M30, right? So if H4 is your higher time frame, let's put higher HT for higher TF, right? Then your lower time frames are going to be the hour and 30, right? So if you mainly trade setups based off the 4 hour, so your trend is on the 4 hour, then your lower time frame is going to be H1 or M30, depending on how much detail you want to see. Now, if your higher time frame is going to be based off of the hour time frame, then your lower time frames are going to be the M15 or M5 time frame, right? So now in a bullish market structure or in a bullish trending market, right, we have higher highs and higher lows, like we went over in the last video. So now typically, let's say this is H1, right? This is the hour time frame. Okay. Typically, what you're gonna see here when price is trending is a bunch of bullish candlesticks, right? This is typically what you're gonna see, a bunch of bullish candlesticks with wicks. Now, when price is actually trending here, right, and all you see is bullish candlesticks, if you go down to the 5-minute time frame, what these bullish candlesticks are going to look like is a trend itself within the 5-minute, right? So there's a trend within inside of a trend in every single time frame. Okay, for each move there is a trend. So again, if this structure right here is the hour, what these moves are going to look like typically is a bunch of bullish candles. Now, if you go down to the 5-minute time frame, this move is going to look like another trend in the 5-minute, right? So these are going to be typically bullish candlesticks here based off of the hour, right? But on the 5-minute, this is going to look maybe something like this, right? So how do you know that price may potentially pull back once you're at a higher high? It's simple. You're going to see a bullish candlestick. So let me make this blue. You're going to see a bullish candlestick, probably with a really big wick to the upside. Let's make this bigger. Right, momentum is going to start slowing down again. You'll get to the momentum section later on in the course, right? And then you're going to see a bearish engulfing, where typically there'll be another wick to the upside, and this bearish engulfing will close under the low of the previous bullish candlestick. So this is what the hour is going to look like at your higher high. On the 5-minute time frame, if you look at this on a 5-minute time frame, it's going to look like this. That's exactly what it's going to look like. And again, in our last video, if price breaks our previous higher low point, this is going to be a break of structure. So price has broken structure on the 5-minute time frame. Then typically what you're going to see again is another bullish candle or another bearish candle form, probably come up to here. You're going to see a wick probably come up to here. And what that's going to look like on the 5-minute time frame is this, right? So if you see this pattern on the 5-minute time frame and you see something like this on the hour time frame at a higher high, you can anticipate price to start pulling back. That should tell you, okay, now I have to wait for the actual pullback itself, right? Now, once price comes down let me get rid of this. Once price comes down to form a higher low, and you see this, see you have a bearish candlestick here, maybe with a big wick to the downside, maybe you're at a pure Z level, a bunch of other confluences that you're going to learn later on in the course, right? And then you see this, a bullish engulfing, right? Maybe with really, really small wicks, and it closed above the high of the previous candlestick, right? What this is going to look like, this is going to be your first indication to buy. What this is going to look like on the 5-minute time frame is this. Maybe not like that in specific. You know, it can have many forms. It could look something like this. Right? It could look like this. It has many forms. But the most important thing you want to pay attention to is this. Right? So let's grab this. Let's just say this is H1 here. This is going to be M5. This is H1 here. This is going to be M5. Right? So M5 is probably going to look something like this. So again, it's the same kind of structure. Right? Same exact thing happening, just the roles are reversed. You're going to see price form a bullish engulfing on the hour time frame. This is going to be your first indication to buy. Why? Because price has already pulled back. Now you have a bullish engulfing, probably at a pure Z level, and you have a break of structure on the 5-minute time frame. Right? So now what you're going to do is wait for this next bullish candlestick to open up. You're going to wait for price to pull back, and then you're going to buy at a higher low point on the 5-minute time frame. Right? At the break and retest of this previous level of structure on the 5-minute. Right? So your entry will be somewhere along here. And your stops will go here. And your targets will be up here. So this is when you could kind of tell that price is going to continue in that direction. Right? So again, this is what a break of structure looks like. This is a bullish break of structure. Right? This is a bearish break of structure. Okay? So again, just keep all of these things in mind, right? You want to look for this at a higher low point. Sometimes it's not about the what, it's important. Sometimes it's about the where. That's more important, where this and where this forms. This is your indication to buy. Right, so in this video we kind of covered the break of structure and when to actually take this long position and when to actually look for continuation in the trend. In the next videos, we're going to be going over bearish structure and pretty much what we covered the last two videos except for a bearish market condition.